Okay, just a quick video. So about 2 weeks ago, I sold a cash secured put on UPRO leverage ETF right here, and 2 weeks ago. And today I'm going to close that early and lock in some profit. Let's look at the spreadsheet here. So right here, I have it in my spreadsheet. I sold a cash secured put for February 20th. Strike price 110, 2 contracts, and it was filled at 249. Okay, here's a screenshot what it's doing currently. It is currently at $316 in profit. And so I'm going to hurry up and get in there and close that and lock that in. It's at 63% profit. So let's go ahead and do that. Okay, I went ahead and I clicked on the option. I clicked on buy to close. So we have buy to close right here. Quantity 2. It was a cash secured put. The expiration was here. The only thing I need to put in here is the price I'm willing to close it at. So now remember something here. So when you sell something, you want to sell high. And when you buy something, you want to buy low. So I'm going to buy to close. So I already sold this and I'm going to buy it back. So a little confusing with options. Remember, always buy low, sell high. So when I look at the limit price here, I would preferably like to get it at 80, but I want it to fill. So I'll go with the midpoint at 85 here. I'll lock in the $326 approximately. Now it's going to cost me $171 to buy that back. But over here, if you look at the basis, originally I earned $496. So I'm going to go ahead and preview that. Okay, I went ahead and I looked at it. So it did not fill at the price I put in there. I had to bump the price up to 90 cents. And it filled at 90 cents. So it cost $181 or $180 to close that. But I still did okay. So let's go ahead to my option tracking spreadsheet here and just confirm it was 90 cents. We filled that at. So here we are right here. I'll put in today's date. Today's the 9th. We bought it back at 90 cents. And we made $318. And that was a 31% annualized return, if you want to figure it that way. And the price today for UPRO, I hit refresh, looks like it's 120. So 120.59 is where I close that at. And let's look at the chart real quick. So just middle of last week here, it was way down here. So when I picked 110, I had a lot of comments on my video saying that that was not a great strike price, that people thought it would blow through 110. So 110 is like right here, never got down to 110. Then it shot back up in the last couple of days back to 120. That's approximately where I sold that at. Actually, 118 is where I sold that at. And what was that, 120.59? Pop that in there. And that's just for information purposes. That's close enough. Buy to close. So we did okay. Well, I did okay. And I like to sort those by when I close the trades. I closed a few other trades today. So if you've been following me, you know that I do NVIDIA every week. And NVIDIA was way down and it shot way back up. And in 3 days here, I went ahead and I closed this today for $635 in profit. And you can see I sold that at $216. I bought it back at $89. So I did have to pay back some. Originally, that would have been $1,000 trade, but I just couldn't turn down this 193% return in, 3 days or whatever. And the strike price that I had was 80. So it was pretty low. NVIDIA's trading at $90 today. So it went all the way from like 74 to 90 in like 2 days. And then what I did, I went ahead and I sold another cash secured put, but I raised the strike price. I accidentally put the wrong strike price and it was 84. So I put the strike price in 84 and got a new strike price. So this is for Friday expiration. If I pop a 0 in there, I'll make another $700 this week. So I'll kind of double dip on this by paying attention. So this is an example of the difference between when I'm home in the wintertime, I'm kind of watching this daily, between that and then when we're traveling. If I was traveling, I wouldn't even be checking this week until Wednesday or Thursday probably. And then I would probably close it then and then roll the trade a week. And so by being home and being able to watch this a little more closely, I'm able to probably make an extra $400 or $500 this week. Now, I probably won't make this whole 735, but I should probably make close to it if I hold this till Friday. So just an example. So for today, if this was a week, I will have made $1,259. So that's not too bad for one day. Obviously, you don't do that every day. That's more like a weekly return. So there is that. Anyhow, I had a few people ask me, how do I close the trade? So that's an example how I close the trade early, lock in the profit. And as you can see, I actually closed 4 trades early and locked in these profits. So that's probably all I will do today unless something crazy in the market happens. I have all these trades here still open, different expiration dates all the way from February 20th to March 20th, all the way to April. So there's a chance I might not really close too many more this week, except for this one here that expires on the 13th, which is Friday. But I have a whole bunch of other puts here that could possibly become quite profitable before the expiration dates, and I might close those early. You never know. So it just depends. All right, I'll wrap that up. If you like this type of thing, make sure you subscribe, and we'll see you in the next video.